Be Wealthy and Smart, episode 1403.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Fed making their interest rate decision this week. That's right, on September 18th, the Fed will announce what their decision is. Will they cut 0.25% or will they cut 0.5%? There's varying opinions about this, but it looks like most people are anticipating a Fed rate cut of at least 0.25%, which would take the Fed's target range down from 5.25% to 5.5% to 5% to 5.25%. It's largely believed that they will cut by 0.25%, although because of the weak employment reports recently, there is room for the Fed to cut 0.5%, so I wouldn't rule that out. And one of the most important numbers for the economy is the Consumer Price Index, because the consumer makes up 70% of the economy. And in August, the CPI came in at 2.5% on an annualized basis, which is the lowest level since February of 2021. On the other hand, wholesale prices rose 0.2% in August, which was in line with expectations. The market seems to be shaking off the news as the Nasdaq posted its strongest performance of 2024. Utilities, communication services, and industrials led the market higher on Friday, with each sector adding roughly 1%. Quincy Crosby, chief global strategist at LPL Financial, said, "Investors are on guard for further bouts of volatility, particularly given the expectations surrounding the Fed meeting." She noted that based on historical patterns, stocks typically have their roughest performance of the year during the second half of September. On a weekly basis, the S&P 500 rose 4% and the Nasdaq Composite gained 5.9%, the best week this year for both indexes. Billionaire John Paulson chimed in to say, "I think the Fed is a little behind the curve. I think they've seen enough data that they can start bringing rates down, and I would suggest more aggressively would be better." When looking at inflation, the one-year inflation outlook dipped to 2.7%, which is its lowest since December of 2020. However, looking at the 5-year inflation rate, it's at 3.1%, its highest since November of 2023. So what we're seeing is consumer jobs and consumer confidence lagging and inflation still being a little too strong. So the Fed has a tough road to navigate between the two. On the one side, they want to stimulate the economy because of the poor job market. On the other hand, inflation is still trending above their 2% rate, and they don't want to ignite another round of inflation. That could set us into something called stagflation, which is low growth, high unemployment, and inflation. So we'll see how this turns out on Thursday at the Fed meeting and what their decision is on the interest rate cut. The good news is the Fed has already told us they've decided to move to an easing policy, so it looks like at least 0.25% cut is in the cards. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.